I don't think YouTube's going to allow me to scale this correctly. Nope, doesn't look like it. Well, I'll try one more thing here. If not, we'll just have to go to Zoom because OBS is dead. Junkin program here. The norm for this one. Saying the resolution is now off. Bunch of errors that it never had before. Everything was working perfectly fine before, but now she's doing the norm. Looks perfect over here, but nothing on YouTube looks like it is clear. Looks like you guys are getting extremely ugly quality. Can you guys hear me or no? We'll restart in Zoom here most likely because YouTube is a failure here. Let's see. Yeah, typical YouTube fails, it looks like. No KB, no bandwidth. Looks great on yours? Interesting. It keeps resetting and telling me I'm lagged out and have to change the resolution. So as long as it looks good to you guys, we'll probably just jump in and start continuing here. Can you guys hear me loud and clear? Yours looks good as well? Okay, that's interesting. Well, YouTube's giving me all the fun errors here. A bunch of yellow pop-ups saying that the video's not even playing because of the resolution, so... Looks good, looks good. All right, we'll just run it. That's fine by me. As long as you guys can see what you're supposed to see here and you can read, because I cannot. It shows just a giant blurry box right here for me, so... Even if I change it to 1440p here. Now it looks good. All right, we'll run it like this. Looks good, looks good. All right, thanks, guys. Appreciate it. Awesome. So this is what you should be seeing here. I'll shrink myself a tad bit. See the full RSI then. All right, even though the Zoom is, we'll just get into her. So, all right, guys, we're just going to start. Fresh little stream here on Sunday breakdowns and how I kind of jump into the market. And how we're going to redo a bunch of our little TA here in start of the week per usual. So first things first is I look back in the week, right? And we're going to go into, everything that happened via pre-market with CPI because this is going to be the biggest catalyst, 1211, right? And if you guys remember correctly here, we had a no GP. Excuse me. No GP tag CPI. Of course, we're not going to count this giant wick down that goes into the golden pocket there, but right now this is what you're going to play with over-unders, okay? So first things first, I go into the back of the week, and if we had a Powell week, a CPI week, a huge PPI week, doesn't matter what it was. And no matter what, we have to go back to it, and obviously this one is going to be the no-take CPI. So we have the 5-minute high-low during the CPI data release. It came out. We pressed up, up, and up, came all the way to those 530s, the 666, as we did the same day right here. And then we ended up pulling back and heading back down. Now, after I chart out the biggest catalyst as far as data is concerned, I go to the weekly, okay? This is where we start no matter what. So this is last week and 2 week prior. So this is the one that we were using before for the golden pocket, right? And this is still going to be a maintenance candle, right, for Fibonacci to tell us what she needs to do with that 1618 in the over-under level. So for us, teal is the color that we pick for our Fibonacci high-low, and this is 2 week ago high-low, right? So 12.2. Now, 12.2, we have an opportunity to see a couple different non-confirms here, okay? So obviously last week we came down into this candle. During last week, we pushed into the golden pocket, which ranges from 520.65 to 516.79. Now, we didn't quite make it to the extension of 537, okay? It's 536.99. That's the 1618 of our fib box from here. So this weekly starts last week's support and creates a giant over-under level, right? That over-under is 526.89 coming into this week for us. So if I go to a 15-minute chart, we're going to come back to those 2 CPI levels, and we're going to come back to the one level it needs to defend to stay in a bullish narrative, and that's the 2 week ago 100 fib. So 526.89, and the teal level here, price action broke over there in that CPI, defended it the day after CPI. Then, of course, Friday had another big force up, came down, and still created a higher low in sequence on that 15-minute chart. And we didn't do too much else as far as just a retrace at the end of the day, because we said we're going to go down to about 527, half candle retrace, and that was going to be about the end of our huge term short. So moving into Sunday, of course, futures are going to be a little bit different, but this is all set up for the Qs then. So as we move into the pre-market start this week, we're going to get the Qs. Hopefully, depending on where we're at, we're going to go look at sentiment. I come back about 5, 6, 7 p.m. after I do this in the afternoon, and I watch the futures open through the after hours at 5 till about 8 p.m. And we come stop in, and then obviously our biggest over-under is going to be the 666 that we had, again, created here Friday for an up, broke through, and retested, came right back to 530.54. So depending on what the pre-market open looks like, we have the close, and the close is going to be the most important thing because we're just jamming at all-time highs. So if we go to that daily, you can see a perfect doji right on the 666 of the CPI, and that's going to be a big help and determining factor as well. So the Qs, obviously much stronger right now than the SPY. So when we have this weekly CPI, or this weekly candles high lows along with CPI, we just have double support for both of those Fibonacci's coming into the 423, 60, and 100. That'll be your over-under bottom of the doji, but what we're looking at right now is hopefully 666's over-under stays above that doji and just kind of takes off on live trading. If it does not and comes back down, it's going to start kind of a consolidation zone. Now, sentiment-wise, that's perfectly fine because we are still only December 15th. We're 2 weeks into the month. We have one more week to the acclaimed fame Santa rally, right? So the Santa rally is what we're going to be looking at, and that's generally we get large amount of trading back after that last week, okay? And the sentiment for the last week before the Santa rally is generally consolidation, but being an election year and at all-time highs, this is a little different than what the scenario of Santa rallies we've seen before because we're at all-time highs, so we're going to treat it a smidge differently. So that's all for the QQQ. That's it. So as futures traders, once we have just our big levels tagged on, we're going to see how those work out in pre-market because we have no idea if we're going to open up in a gap down, gap up. If the weekend news affected us terribly, we're not going to go too much into the QQQ. So 21,908 on the NQ. So I'm going to move over. I'm going to do the same exact little setup here. And generally, it's obviously going to be quite a bit the same, right? And the same week, we're going to chart out here. Make sure it's teal, because that's what we always use for our weekly colors here. And 21,677.51 is going to be our over-under for here as well. So we have an all-time high candle with a fat body on it, right? And this is the last week's candle. Obviously, the body open and closed above prior body. That's also pretty bullish. Now, we pushed past that 100 fib a little bit. We just didn't have enough oomph, right, to get to that 22,136, or of course 22,000, the psychological number, right? We missed it by just under 100 points. So we're going to utilize this weekly high-low first for the biggest over-under on the NQ, okay, 21,677.51. We're going to go over to the ES. We're going to do the same exact thing, but this is obviously going to be a tad bit different, a little bit more interesting here. We have two almost identical weeks here, right? And this is the week that's going to be a little bit more confusing here. We're going to take that all-time high candle. Doesn't matter if you put it up, down, around, whatever your extensions may be. Whatever the point is, we don't have a point. We're not pointing it to go to the upside or the downside right now. We're actually looking for just high-low. We want to see where those 50 fibs are. So the all-time high candle, we have an absolute and utter engulfing candle on that weekly, right? So 12-2 is weak, created last week, 12 of 9, and we just didn't get too much of anything. Now, the only bad part that sticks out for you guys, you should see right away, is last week's did not match the week prior. 6111, we never got to the highs, never got to the lows. So the engulfing candle that we had last week put in on the weekly here, we never actually came to 61165 or back down to 635.56. Now that's going to be the determining factor of direction for most all the market. If we take this, extend it to the right, get TOS to get this back on screen here. And now this golden pocket in the 60-80s, which we day traded last week a lot into that 60-80 level for multiple days, that's going to be the biggest golden pocket de facto. So closing way down here for the week, let's go to the daily chart here from the weekly. A couple things can happen here, right? So the oscillation indicators are numero uno to start once we have our Fibonacci set for the prior week and the daily. So right now, we're getting a little bit of topping action. We've seen mass divergence multiple times over the last week of trading through QQQ and SPY. But if we, shortcuts, if we take that sentiment and just tag it right to this weekly high-low Fibonacci here, we're going to see that no matter what, even if the oscillation's kind of shooting down, we have that divergence, we still have a completed Fibonacci that we need to do yet. We still have to complete the 611.65 and the 60.35.56 top or bottom. And with the weakness coming in on the MACD, the weakness coming in on the RSI, and potentially coming for that 50 RSI tag, the sentiment coming into this week is going to be the same golden pocket for direction. So if we are under 6,073.61, say we open up, you know, wherever the open close happens to be, we closed down, we open up, fill a little bit of that body and start heading back down, our over-under level becomes 6,035 because obviously we need a tag on the bottom because this is the weekly high-low range in the teal. No bottom tag, no top tag of that weekly candle. So this week from last week is going to be another kind of trap week. We're kind of leaned right to that smaller pullback side just for the week, just for the 5 days, Monday through Friday. As we lean into the Santa rally, that can come right back up. So it's going to look something like where the price action comes in, has an opportunity to test these fib zones, which we did all last week from the week prior. And now we have a follow-through potential where we can get to 6,035.56 and utilize that as an over-under level where trend direction hopefully starts to matter. Now, because the oscillation indicators are known to shrug off divergence, especially in the longer standing time frames, that's something we're going to keep in mind big time here. So obvious examples here, when we see some MAC down here like the end of October we had crossed, and RSI, it's somewhat similarly setting up for the end of December. Now, are we at that same exact level? Well, we were coming off of all-time highs there in the early October, and we did get a little pullback, could she snap back up, but the catalyst for CPI now, remember from the start, has a no tag golden pocket. So we kind of lean more or less to let that slam down into the GP tag of said CPI so we can fill the bottom of the weekly range back down at 60,000, 6,035 rather, not 60, and so on and so forth. So if we go back down to the CPI day, right, the huge mega force up day, we got that 7:30 a.m. data right here, and 5-minute, 15-minute, generally speaking, it's not if the fib is going to work, it's when the Fibonacci works. So the 7:30 candle right here, I want you guys to just keep present. We'll leave the regular colors on there. like so. So now I want to show you guys why this matters so much for the divergence between the two. So this is a bigger takeaway when I say that they kind of run from each other. The futures don't always line up exactly with SPY to ES, QQQ to NQ. So when we had the big CPI runaway candle, we came back down to the golden pocket on ES, ripped back up, and we already had completed that because ES is open for, obviously, a lot longer trading hours. If we go to SPY and its golden pocket, that last day that we kind of slammed back down, right? Finally got him. We were talking about this live on stream. This is what our tag back down was. This is what we're looking for QQQ to manifest for us here, because SPY is going to be that leading market. So the two things that happened here in the sentiment between the two all have to do with the tag and no tag of the golden pocket, right, that we have. So for this one, we obviously have the CPI completely done on SPY. That was the divergence part between QQQ and the SPY. On the QQQ, we have absolutely no GP tag. On that golden pocket for CPI, SPY had the front run. SPY is not at all-time highs. QQ is, right? QQQ is. So the sentiment is still we have a great algo open down there on CPI, right? So we could fall back into QQQ's over-under for a quick dip and then rip back up. And I think SPY has the opportunity to kind of decide that. And what the decision is right now on SPY is going to be the golden pocket of the pre-market on SPY. That's it. It's going to be an over-under level. That's going to be the trend direction. And that's going to be the sentiment in which we take into consideration at that 5 to 8 p.m. as we start to go, is it going to bounce? Is it not? Because, again, with that divergence, we have the SPY and the ES that's already hit our golden pocket Fibonacci no test CPI. So like we just did, we went back in. There we go. Made the high lows. ES is here. QQQs is not, which means since we filled up this golden pocket range on the SPY, on the ES, and we did not do it on the QQQs, obviously having the divergence, this over-under box is going to be everything. What do we see about the over-under box here? Well, if we lose that Fibonacci range, right, we get outside of it, we start breaking down under the CPI candle on ES and SPY, not the Qs. We'll come over here. We're going to turn this to the backside because we've already did the entire extension range at the top. So we're going to fib out the CPI to the downside. Now this golden pocket, where did the price action go? Now this golden pocket is going to be, again, one of the biggest, if not the biggest, over-unders you're going to see. Obviously, on Friday there, we kind of broke through it, didn't allow it to really get any extension legs down to that 6040, which is the 1618. If you back up there a little bit, you can see what we're kind of talking about there. Now that we're extended, we haven't quite reached any kind of oversold metric outside of the CPI candle. So two things will happen here. It's going to hold that fib box, CPI high-low, 5 minute, okay? It's going to hold that fib box. SPY is going to decide to pop up. Well, that's going to create the diverging market of the NQ and QQQ to hold a no tag of its zone, right? So just like we do prior, if the ES and SPY bounces because it is in support, the QQQ has room to do what? Drag up from here and hold prior Fibonacci zones, right? Now, that means 21,719 has to hold. That's the 423 from the CPI. Then it goes back down to 21,616. That's the 2618, 21,553, so on and so forth. After a Fibonacci zone has made its way out in full hit every extension. So again, the CPI here has ran, came back down, tested the weekly, right? Notice the back test. It did not hold above 423.60, did not get to the 666, walked itself down from the 423.6 to the 2618. Found support at the 2618, popped up, ended up holding the chop zone around 423.60 fib. Came right back up after nailing that 666. Tries to come again all the way down, and the last Fibonacci we have not tagged on the backside yet is 1618. So we know that if SPY now loses that Fibonacci box on ES that is already filled, and we start heading away, and we're outside of the fib box, we know Qs, right, has a chance to get drugged down under the 423.60, under the 2618 to target 21,553.20 on a pullback, right? and that's completely up to the open. What do you think our over-under is going to be here on NQ to help us with that potential up or downside? What do you guys think? There's a really big psychological number here. There's no wrong answers. Spit them out. No such thing as wrong answers. And if you don't see it, it's not a big deal as well. But what we have here is a very big psychological number, right? And that's going to create a very large over-under. Oh, you don't have to message me on Discord with the answer. You can if you like, though. 100 EMA. 100 EMA over-under is not that bad. Psychological, though. Not so much moving average, hard technical analysis. We're talking psych number, right? 21,800 on the NQ. That's a psychological half whole dollar, right? When the price action slammed all the way up, it didn't quite make it over its last psychological tag, right? 21,800. That's correct, Chris. Thank you. Yep. 21,908. So 21,908, right? 21,800. That's the closest psychological number. So if we lose 21,800, we come back down. We're going to fight with 21,007. So we are in between those two hundreds, 21,700, 21,008. And that is going to be one of the biggest ranges you watch, especially because we're coming off of what? All-time highs, right? So as we like to do, we're going to go back to the longer standing time frame here. Keep missing my tab button, command button here. And since we get a little busy with the fibs, we have the walk down fibs that we just talked about, right? So after that 666 is complete, it came down to the lowest of the 2618 point. So from a daily standpoint, we still have this kind of massive flag here that pushed all-time highs from this 1211 stick, right? Pushed out, flagged out, clearly makes it a very large over-under point like we discussed at 21,677. If we hold here, it starts to rally back up. We're not going to worry about the 666 or anything else like that. It's not going to break down. If the ES goes down, NQ goes under 21,677.51, off to tag the bottom of this big flag breakout potential, and potentially the 1618, 21,553. Now, that's not saying we're just going to shoot to the downside and go. We could easily get a chop week up here because it's the last week before the Santa rally. Then we could start seeing, a little bit of downside. And again, this is going to be hopeful on not diverging nastiness in the markets. Okay. So that one thing we want to keep in consideration is not even consideration. The entire trade plan with the open here is the box of the CPI fib. Is the SPY going to allow the CPI box to become support in between the 100 and the 0 and start leading the futures price up? Because this is, right, we're closed right here, white dash line, right on 60,004, right? Where did that handle, right? No, it's really simple, right on the golden fib, right? So it is going to be either above the SPY or below the SPY is 604.8. That's going to be the golden pocket. Okay. So no matter what, once we see ES making its move at the 5 p.m. open tonight, so a few hours, and I'll be back and I'll be posting on X. So give us a follow over there, and I'm going to do some breakdown furthering this live stream so you can kind of see exactly what these playouts look like live before we play them out. And what I'm going to do is I'm going to come back at about 7 p.m., 8 p.m. tonight. We're going to see where this opens up right here. We're going to see the directional pick from 6,057. I don't care if it opens up in a small gap down. Generally, it doesn't. My guess, right? And of course, we play the chart in front of us. This is just a guess. No crystal balling. We don't just nothingness, right? We have the golden pocket that needs to be tagged, and we know that in Q. So I'm going to assume that eventually within the first part of the week, whether it be today or not, Monday, we're going to come up and we're going to find a breakaway point to the downside, and it's going to be under 6,050. That's a pretty good psychological half hole as well, right? So a half whole dollar there at 6,100, 6,050, 6,075. Each one of those point of interest are going to be, a highlight in the day. It's going to be an over-under level. So 6,050 lets loose. We're obviously on the way back down to the next fib zone, and we're just going to walk it down. Now, again, for the ES, we already have command button. We already have this very interesting double engulfing. So we know for a fact that at least the easy trade at the futures open is to stay underneath that and come down to what? The weekly, right? Because as we discussed earlier in the video here, 6,035 has no tag. So again, the fibs have not completed last week's high low, 6,111, and the low here is 6,035. We need to tag one of those this week. We're not going to put in another tiny week like this. We're going to either get a breakup or down. It is not going to be a third consolidation week. My guess is to that downside, hit 6,035. If we break out and down of 6,035, then we can start going, okay, we might break that huge X support of 6,025, 35. Then we're going to start snapping back down to the moving average, the 10 SMA, and we could actually put in another loop for the Santa rally. And what is a loop? If you're not familiar with some of the breakdowns that we do here, or if you want to use the indicators we use playlist, they'll help you out with these terminologies as well. So a loop right here, that price action comes underneath the 10 SMA in the blue. It loop and swoops, right? So its price action starts, breaks under the 10, hops back up, holds the 10, walks away, right? Broke under the 10, loop, gives you extra confirmation, walks away, tags the 10, okay? So we have a couple 10 SMA tags here on the weekly, which we could also perform again for a Santa rally. Let's go back down to the daily real quick, because we're going to get a little different metrics here of loops because they're a little quicker. And this is why we kind of like a little bit more to the downside. Now, again, the oscillation indicators are lagging, okay? They tend to, just because they're pointing down right now, right? The MACD crossing, getting a nice little red wave. We're at all-time highs with a potential little lower high tag here. Could we just consolidate, go a little bit down, and most likely get bought up by the end of the week? Absolutely. So if that's 10 SMA on the daily chart becomes resistance and holds down, we're going to start looking at that 6,072, 6,073. So again, I think we're going to open low. There's the prediction. Underneath the golden pocket, loses 6,050, comes down to 6,035. I think that's the first ES move. And if we stay above it, obviously the inverse applies, right? We're going to stay above the golden pocket, and we're going to do what? Exactly the opposite, over, under. So we have a chance to head up to that 6,111, where we had missed it right here, 1229. This candle did not complete the top, did not pair up to all-time highs. Candle 1211 on the CPI also did not push all the way up, did not get 6,111.65. So we have a better chance to fill the 2 week ago range down to 6,035. Probability-wise on the lower high, we have the lower high on the RSI, the MACD, everything onto the downside. Appreciate it much. Any questions as we move into the VIX? Post them up here so we can come down here. Appreciate it, Chris. Yeah, we'll be doing more YouTubes here. We're just starting nice and slow, as I'm not the super biggest tech savvy guy. We're much better traders than we are YouTubers by all means. So I'm going to jump into the volatility index real quick, as we got most of our major levels done now in EQ, NQ, and ES. And what we're going to do is we're going to pair those out a little bit later today on X. We're going to follow up again on the old Twitter. So we're going to bring the volatility index in here, and I just want to talk about what we're seeing here with our fear indicator. Okay, so if you don't know about the volatility index or how to use this bad boy here, this is a fear driver, right? The higher the volatility index, the easier it is to have follow-through moves to the downside. Vice versa, if this VIX is very low, 12, 13, $9, we've traded it at. When it is under, in the sub-teens, under 13, right, it has a very hard time dropping, okay, the price action in the market. So ES and Q, they have very easy times to kind of push to that upside when the volatility index is low. They do not drop. They do not follow through the downside. It's very hard to break it down. But we also don't get very large, huge whipsaw days. Now, what I like to do with the VIX here is I attack it in a range of gaps, okay? And we've had a ton of gaps here in the last one, so, in the last few days. So let's talk about this little choppy gaps, and I'm gonna delete these because these are all gaps that we have been hit this whole last week that we have been following. Gap and price action, very simple. We try the live trading hour gaps mostly, okay? So on an example, if you're not used to utilizing the volatility index, if you look to the last trade day here, this is Thursday to Friday, we had this big gray zone. That gray zone was right around $13.75. This is an intraday large gap. If I put a price level right here, just at gap fill, so what I mean by that is the price action is down here on the VIX on that Friday open, and it had an opportunity to come up to 13.77 because Thursday's close near the VIX left a gap, and the fill is $13.77 because we are coming from the bottom up. So I put that fill line on the top candle. So when we know when the price action reaches 13.77, that gap is going to be filled. So here comes Friday's price action, and why were we so bearish at the Friday open and we called the short? Well, we're at -1 deviation, $13.39. We had a gap down open on the volatility index, so it pushed down and it left a gap at the open. You can see the tick that we're supposed to shut down at 8:15 Central, opens back up, left the gap. Now that gap can be filled same day. Price action came down, we said short the market. And any pops, please don't short till after, pre or a little bit after. And good thing we waited because we would have been stuck managing a little bit wider of a trade. Don't want to do that. But because this gap on Thursday was left open, okay, we had a viable target, right? So VIX had a gap here Friday. We chased down this gap at 1377, right? Hit it, came back, tested it as support, and pushed back up. So again, you can use technical analysis on the volatility index. Anybody that doesn't know how doesn't understand gaps or algos. So when we came up to the 1377, squeezed it to the gap, back tested as confirmation, and went again, and that's when the market left, right? So what do we do at the left? What's the macro? Well, as we back up a little bit here on the 5-day, 5-minute, what else do we see on VIX? Well, we closed at standard deviation center, which means we don't have a highlight close. And a highlight close is something where you're really going to see something where the VIX is extremely extended to the downside into standard deviation lows or extremely extended into highs. If you notice this price action on a 5-day deviation, we're utilizing standard deviation on a 5-day chart. This has nothing to do with the minute. It has everything to do with the time frame. Like if I go to the 5-day 15, you're going to see that these lines are almost identical. The standard deviation -1, 5-day 5-minute right here, $13.40. If I move that into the 5-day 5-minute, $13.39. Extremely close. So on this 5-day, you're going to notice if you're not used to that volatility index, you're going to see that the +2 up here is an absolute rarity. Okay, so 0, +1, +2. Then we go 3 in the light blue, and we have a 4 in the purple. Super high up there in deviation. So a big close on the volatility index is when something happens immensely large in the market. I don't care if it's a Trump tweet to war headlines to CPR to the end of the day Powell FOMCs, and the VIX will close at a very highlight reel, right? It'll be highlight close, highlight open, that means, right? Which means the VIX closes extremely high into an overbought and oversold territory. Generally, the VIX does not go outside of the +1, -1. That's a general. It needs CPI, world news, anything else in the world here to help this really move outside of the range. So as you can see, that -1 held right to the center, -1 right to the center, -1 right to the center. So from a general term, we know that when the VIX is oversold into the -1 deviation, we have a chance to bounce, right? And the market has a chance to go down because volatility up, market down. Now, when they come up to very large extensions like the +2 red zone right here, we have a very sneaking suspicion that we can have an inverse move because we are way overbought into this 1431, slams down on the volatility index for that whole pre. Obviously, you know what day that was. It's Wednesday for the CPI. So the likelihood that VIX was going to go higher and higher and higher and higher was just lower percentile chance because no follow through is going to happen outside that +2, -2 unless there's mega catalyst. There was mega catalyst. It was CPI, went the opposite way, and down she went. On the longer standing time frames here, we're going to jump into the volatility index and just what we see happening on the same thing, the oscillation for the market. Okay, we're going to see the MACD swapping. I don't know why that keeps popping up. I don't know what I'm hitting. The MACD on the uptick. Okay, moving averages starting to get buyers on the VIX. RSI kind of negated, kind of nothing. The bigger takeaway from all this. And of course, the standard deviation back here, we can ignore. I'm not going to kill off the custom one. So the weekly deviation is going to be these giant dashed cartoony looking lines. The daily deviation is these hard lines right here. So same rules apply when we're not intraday day trading this, looking at the intraday 5-day 5-minute. The same exact rules do apply here on the standard deviation outside of the VIX. So this is the 0 line right here on the weekly. This is the 0 line on the daily. So we're going to focus on these hard lines right here. We're going to ignore the squiggles. Now, the daily standard deviation center rejected during the massive gap we have in the 20s. We come down for a lower low, okay? This means lower low right here, and then it got bought back immediately. If we start to maintain this lower low candle, we have consolidation and accumulation attempt in the VIX, okay? Somewhat contrary to the fresh low algo stop outs we use, the same rules apply here. So price action would be sideways here, broke to a low, snapped, consolidates, and then starts to head back up. This is going to be similar to VCP patterns, volatile contraction patterns, stuff like that, where you get a good consolidation sideways before a head up after a fresh low. So if you see that VIX starting to drain back down, gets delusional, pops back up, starts consolidation during the MACD uptrend and RSI trying to hold. You're starting to get convergence instead of divergence there, and we're hoping the market does reflect and not have to beat us up a little bit with further diverging markets where the markets are just going higher and higher and higher, and the VIX just will not, right? So in the near term, this is going to give me at least a sneaking suspicion to play our play that we are talking about with the early short, where the market has a chance to come down for those weekly deviations, right? Or Fibonacci's, during VIX's time under the weekly deviation and daily deviation -1. So if the white is the center line, this is the -1. We just talked about the 5-day -1 being mass support. Look how much time we have now spent underneath the weekly and the daily standard deviation -1s. It's due for a time to attempt to come back up to that +1, which would result in a attempt at the massive daily gap that we have already failed, okay? Now, the bad part about the timeliness of this technical analysis. Now, this technical analysis for VIX, the timing is poor. Why is the timing poor? Because seasonality sentiment exists for the Santa rally, right? So the Santa rally is only a week. So if we have 5 days of the VIX even leading up a little bit, and this week is downside, and the VIX does come up a little bit to here, it might just flop right back down for another higher low before it attempts this moving into January of next year, because of the seasonality sentiment in which we are at right now. That is the psychological barrier that we have to struggle with right now as intraday day traders to accumulate a over-under, a disposition for momentum. We need to have those things in front of us and viable on the chart in order to make those plays, right? So let's go back to the intraday real quick here, and we're just going to back up and notice just a couple near-term gaps, in my opinion, of price action. We had that fresh low Friday banged up to fresh high. We had a couple consolidation days. Now we've got very close to some of the gaps that we still had open here, okay? So this guy got filled. We have this one that's unfilled at $14.37. Everything else has been pretty much filled, and then we're going to start moving up to the next range of unfilled gaps on VIX. And these help us with intraday targets, and especially with day trading a ton, because when we're in a day trade, and let's say we start the Friday VIX here at $13.24, am I going to worry about the catalyst of VIX rolling up, 2 points on a Friday, end of the week, without CPI, without Powell, without a data driver, without even something small like retail sales? We need something huge. So the volatility index, when you start looking at all these gaps, you don't just pick just a random gap at 4, 5, 6 points away. You need to have some kind of tangible evidence that is going to allow you to assume, right, that the VIX has a chance to move. And if the VIX swaps its deviation and attacks this next closest gap, that is going to help us dictate whether or not we're going to get that early Monday, Tuesday short on ES and of course NQ, but ES has to lead the way. That's the biggest takeaway here that you guys are going to want to take away from this breakdown of the play. The SPY has to lead us. We have too much divergence between those two tickers because of crazy stuff like Tesla, mid all-time highs dragging up the markets, the chippers going back and forth, which we cover a lot in our pre-market breakdown in our premium Discord. So with that being said, we're going to tie all this in right here and do a quick little recap of what we're going to look forward to on the prediction. We're going to come back about 7, 8 p.m. on X. And if you guys want to check us out on the post there, we're going to slowly update this as we go, right? As we're predicting this video, we're going to follow up on X to see how everything went and see where the adjustments need to be made, because this is going to help you guys build real market psychology for day trading. And that's one of the most important things. It trumps technical analysis by all means, because without hype, fear, and greed, we have no scary volume. Without volume, no other indicator works in the stock market, period. Without it, plain and simple. So prediction is, let's see if this higher high is going to stick a trend. We have a fresh low potential reversal, right? So the scam, the market loves to push down into fresh lows. You would trap a lot of shorts in a standard charting period where you're consolidating, break a fresh low, and then go back up. We know from studying volatility contraction patterns that the fresh low algo scam stop out can result in a slingshot to the opposite way, which it did on Friday. And we had catalyst for that, right? We went over that on all of our live day training Fridays and a recap video if you want to check that out, and what the catalysts were for the market to drop. This is the catalyst for our market to come up to a 1437 VIX and drop that sucker out of the potential fibs range there just for this week. We don't really know how, it's not going to, my assumption is we're not going to get a correction 8 to 10% every single time. We need to pull back. Sometimes it can consolidate and give you 3%. My assumption is something small like that. If we get it, we're not going to get something large leading into that FOMO crazy Santa rally. So VIX has an opportunity to go to 1437. We have an opportunity to swap the standard deviation to an uptrend. Right now, the standard deviation is pointing down. All these levels you see right here, if you see these bars right here, the +2, -2s, the deviation from 0, +1, +2, these change colors on trend. So when they're in a downtrend, all the lines are pointing down, they're red. Vice versa, if the volatility is in an uptrend, these are green and pointing up. So when I say swap the deviation, that's what we mean by the VIX going up from here, pushing, 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 and then it can swap the standard deviation, give us some +2 bars that are green, and then we can start running up to 1437. If we get that continued breakup and it goes a little higher, we do have 1556, but of course we're going to trade the chart that's in front of us. We're not just going to magical crystal ball it that far when we don't have riding sentiment or Momo or anything else to really worry about. So my assumption is when we see VIX open, we have a chance to consolidate that 0, head up to 1437. While the VIX is heading up to the 1437 magnet gap, we will see ES have an attempt to hopefully open near the close, lose the 100 fib, right? Remember, CPI, golden pocket, already filled, so that the whole thing is already done, right? To the upside, to the downside, everything. So if you were to take this CPI, right, and put it to the upside, everything has already been done to the upside that we needed to be, right? So the CPI is way back here. Look, we went as high as 6,092.40. That's from this candle, but we did it obviously over here. So here's the CPI. We came all the way up to 6,101, whatever the top was, 1,114. So the 2618 is the strongest general 80% hit fib that we always use. There's an 80% chance to hit that of an extension outside of the 1618. Generally speaking, it's the best. So the downside, VIX goes for that. We lose the 1618. We point this to the downside, and we end up at 6,024. And that's what we're going to look for on the futures open. All right? So the futures open, we'll be coming back here. We're going to be doing that. Same with the NQ. A little bit of a price target prediction. I don't know if you guys remember, but we're going to use 21,800 and yesterday's close, which is the white dash line right here. So you're going to want to pay attention to your close right here, 21,760. Now, it's not to say that we can't pop up from that yesterday's close and run into 21,800 again and then roll back down. Again, is completely, in my opinion, up to ES to go to the downside to drag the Qs out of its completely gnarly deviation. Now, again, we hit the 666 full extension on this guy, right? Just under 22,000. So, a nice little pull back down to that 21,500 before she snaps up. I don't see it happening just the easy peasy in the Santa rally. I think this thing's actually only going to come down a little bit into some of those weekly supports, yesterday's lows, maybe 2618, then has a chance. And that's why we're going to be playing ES to that downside of the weekly. Probably not NQ because of how crazy the strength divergence has been between those two tickers. Now, if we do get a play, and it's one based off Friday's price action where we do have an all-time high, 21,908, it rolls down into that weekly, right? The biggest over-under for us, again, on NQ is that is 2 weeks ago, 21,677. If we confirm this lower high with Friday's action to break that and starts heading down, then we have a chance, okay? But it's only until we get under yesterday's close for the easy play, that's the scalp short, it would be under 21,760 to maybe 21,677. So you'd be coming into that weekly range where if we did open up here, we start to reject 21,800, we have a chance to make a day trade scalp over 100 points down to that weekly range. Now, I implore you to potentially hold that 423.60 as an over-under too, because once, like we said before, we walk these Fibonacci retracements down. 666 hits 423.60. If the 423.60 holds and consolidates a couple days, it runs again, fine. We'll use that level. If not, it breaks, goes down to that 1618, and we'll end up seeing both of our targets hit, where it's going to be 21,616, 21,553, and that's going to be the 1618. That's not tagged yet, okay? And again, these things like to walk itself up like a ladder and back down. So the Fibonacci high-low walked itself to the 666. After it walks itself to the 666, it goes down. So what happened to the 666? Went right to the 423.60. Okay, that was the whole price action Friday. Now under that, 2618. Has that already been hit? Yes. So we're not worried about an instant magnet under the 423.60. We call that the danger zone, because in between the 423.60 and 2618, that we had made from the CPI candle, we already have a tag of 2618 that's already been done. So we needed to actually clear under 2618 in order to get our target of 21,1553. That's what makes it dangerous on the short side. So we'll see if it stays under the 21,800 for the open, right? And then we're going to see if we can continue that, and it's all going to be based on ES. So those are a couple little sentiment breakdowns because we can't give out too much stuff for here. And from this point on, every Saturday at noon, coming up of the week here, we're going to do a weekend mini mentoring right between 12 and 1 Central. So if you guys want to tune in for the next, we will be doing it every Saturday now. I should have everything opened up. We got the schedules all changed up. So I'm going to start teaching the sentiment of psychology when we go into this stuff, but I'm going to use my sentiment trader. I have a subscription over there at sentimenttrader.com, and they give things like smart money versus dumb money. We can look at TLT bonds and just notice structure of market. Now, since the algos and quantitative easing came in and shot us up to the all-time highs over and over again, regardless of inflation, regardless of PE ratios that are absolutely wonked out between the top 7, so on and so forth, that is a very big takeaway that we're not going to be into those sentiment indicators where it's life or death. We're not going to utilize dumb money, smart money like a life or death scenario because we do have a lot of other things in the pot churning between crypto, presidential election season, Republicans taking office from Democrats. A lot of things are going to kind of not be, is going to make it not cakewalk. It's going to be a lot tougher, my friends. So, but we will be pushing on to push on. So I didn't see any questions posted on there. And we not, so that'll most likely be it for the little stream. We're going to be doing these every single week now as we slowly get in. So the more stuff you want me to cover, the more stuff you comment, the more stuff you contact me with, the more things we have to cover. The more content we'll have. So if you guys want to see something, please comment on this and we will cover it that next time and I'll give you my best shot. Anything from stocks, ETFs, gold, doesn't matter what it is. We got some overtakes for it. So that will be that. Subscribe to like, appreciate it, man. Brandon, you're talking about the New York Open, correct? Yeah. Standard 5 p.m. Central for me. So 5 p.m. Central time. So right now it's coming up to 2 p.m. Central, I think, 1:45. So I'll be back in about 3 hours. Well, I'm not going to be back the minute of on 5 p.m. I'll probably be back around 6, 7 p.m. We'll watch that first hour, right? And then we're going to jump on to X and we're going to articulate everything we broke down here. We're going to explain how that price action is going to come into those over-under levels. We're going to post some pictures of MACDs and RSIs reflecting on an over-under level, how we're going to kind of structure that. And I'm going to start showing you guys the psychology of how you can really just limit your risk and how it's easy to just let go and not trade this market if you don't have to. Like one of the biggest takeaways is just don't trade if you don't have to. There's no point. It's all lazy trading, and that's the easiest stress-free trading is not worrying about to be in a trade all the time. So thanks much, guys. Take care. If this sounds good, if you ever want to trade live with us, the link is in the description. We do this live every day at 8 a.m. breaking down for the premium, but I show you my trades, the technical analysis, and I sit here and I yap and I yap and I blab all morning during the trade so you can see every little technical factor, or at least hope to follow around every technical factor that we have on the screen during the trades we have open. When we close and we open, we're popping on the small account challenge. We also have a huge video, or a lot of videos starting this week on the small account challenge. We have a whole new playlist. So we'll be banging out some YouTube. Crazy this week. Thanks again. Stop in. Again, the link is in the description. Sub if you want to catch the small account challenge. We put $3,500 in a small account. We're up to $5,000 in 3 days of trading. That's a little too fast for me. We're actually going to try to slow that down a little bit. We're not going to try to throw heavy pro aspect trading on a $3,500 account. I think we could 60 to 100 to $200 a day. Make it viable, make it tangible, make it something that's easy to digest for people. We're not just going to start throwing large moves back and forth. Okay, it's going to actually be something you can reflect on and go, oh, well, I don't know how to make $3,000 to $10,000 in 8 days because I don't scalp 47 times. Well, I don't want to teach that either. So we're going to be having a real slow 3,500. So sub for that playlist. Thanks for tuning in, guys. Hope you guys have the rest of the relaxing Sunday. We'll be back again on X in about 4 hours here. Yep, just about 4.5 hours. Gonna go hang out with the kiddos now again and see what they're up to, and we'll see you guys then. So thanks for tuning in. Have a good rest of Sunday.